Hello and good evening. It is approaching the midnight hours here on the 2nd of August 2017 here in the northeastern corner of the United States. This is Christopher Aaron, and I do thank you for taking the time to tune into this broadcast. We are going to focus on not only gold, but the dreaded M word, and that is silver manipulation. Does it occur? Are there examples of it? And how is this going to play out into the future? Are they going to continue to hold the price of silver down forever? Let's take a look at some examples, and I'll give you my thoughts on that as we get into this. So we start just looking at gold here briefly. I'm not going to bring up the main gold chart in this video. If you're unaware of where we are in the gold market right now, please take a look at the last week's video. Suffice it to say that gold has failed once again to break out and sustain an advance from the long-term downtrend line from 2011. The giant pennant-shaped, triangular-shaped consolidation remains in effect as we see the attempts to hold 1265/1270, this region in here, repeating in their failures. So we see overnight hours here, some more selling coming into the gold market. They are choosing the very thinly traded hours here at the very beginning of the Sydney market. Someone chose to dump a couple $1 billion of gold onto the market, but isn't that what we should expect? So I'm going to address this more in the silver segment coming up in just a moment. Now, so gold has failed. That's the big picture item here, until proven otherwise, to overcome that downtrend. However, one of the things that I wanted to bring to your attention is if you just look at the y-axis here of this chart, courtesy of Kitco, thank you. The y-axis of the chart here, we are looking at $2 bars. So this looks like a rather dramatic move here, but it's really only $6 from the beginning of the open here, basically to the low point. If you have been following the precious metals since the 2000s, especially since 2006, 7, 2008, 2009, I mean, absolutely 2010 and 11, you will remember that it was common to see not $2 y-axis increments here, but $5, $10, $20, even $50 increments here on the y-axis. So what I'm saying is that we are seeing even with the important technical action here that deserves your attention. It deserves your monitoring here, because this is really going to impact everything related to the precious metals for the remainder of this year, probably well into 2018, if gold continues to fail at this juncture. That said, this is still a relatively low volatility environment. That's the big thing that I wanted to bring to your attention here. Low volatility, we're at record low volatility. This will continue until it stops, and you're going to notice the change when we no longer are seeing these $2 increments here. This is, from most measures that I've seen, this is the lowest volatility in gold in the last 10 years that we're seeing right now in the third quarter of 2017. So there's certainly potential for there to be a lot of fireworks, and it's going to really matter which way this pattern breaks out, because if it breaks higher, you're going to be looking at fireworks moving upward. This is what I always say, and people, those who are not technically oriented, when they hear me say there's a big move coming in one direction or another, that is exactly what I mean. And it doesn't just mean the price is going to move higher or lower and therefore I'm covering all my bases. What we are saying here is that the statistics show a historically low volatile environment right now amidst a triangle-shaped consolidation. And when you bring the two of those together, you are looking at a dry tinder scenario. And so if you are leveraged in this market, you want to have a strategy where you're covering your bases. Because if we are right on the upside, we're going to make a fortune in the mining equities because they are the lowest that they've ever been valued in 40 years versus most asset comparisons that we can look at. So if we're right on that, we're going to make a fortune. But if this pattern resolves in the other way, you want to have some protection because this is going to be a major move downward. And right now we have a number of negative leading signals. I don't stay married to any one position. However, and if I notice these negative signals changing, I will very quickly get fully long again. So I see no problem with changing my perspective as the facts change. What would any other reasonable individual do? As we switch over to look at the silver market acting relatively weaker, and let's get into this discussion on manipulation here. This is what I wanted to bring to your attention, the pink highlight here. This was the price action from yesterday, Tuesday. This spike up here in Asia and spike back down, which has now led to more selling. What happened here? What we had on this this occasion here, this very quick, this was over the course of just 15 minutes of trading action, you had buy stops that were flushed. And I'll describe that in a moment. Was this manipulation? Yes, absolutely. We've seen this kind of thing increasingly here, especially in the silver market. So there are some entities who are trying to really knock this market all around. And this is an example of that. So what actually happened here? If you notice, the previous high, for example, from Monday in silver was right here at 1685. And so you had buy stops at 1685. If you're not familiar with that term, buy stops, what does this mean? It means that there were traders who had initiated orders in the futures market to buy silver only if the price exceeded the 1685 high from Monday. So this is a type of order. It's called a limit. It's basically a stop limit order on the buy side. And what you'll notice here is that the price momentarily spiked a couple of cents higher than the high from Monday on this spike. So yes, someone was forcing the price higher, getting these people to buy, and then shoving the price lower so that these people would have to sell at a loss and hoping to cause something of the beginning of a waterfall type of decline in the silver market, which, I mean, this is still early to call right now. We're only one day after this type of buy stop flush here, but it looks like so far they've succeeded in that. So again, is this manipulation? Yes, but here's a few things that I want to say about it. Number one, manipulation happens in all markets. So it's not unique to the silver, although I do think silver is specially targeted sometimes by specific entities. That said, there are entities that manipulate. I've seen this in many different markets. I've seen this in the US dollar market, which you're talking hundreds of billions of dollars traded every day in the US dollar across all the currency cross pairs. I've seen manipulation attempts, flush stops happen in the US dollar. I've seen it happen in the smallest of junior mining companies where you have some stops here and someone will knock the price down, get those people out, and then these junior miners will rise 50 or 100% 5 days later. So this happens in all sorts of markets. Yes, it happens in the silver market, I'd say more, probably more than other markets, to be completely unscientific about that statement. Those are just my observations. But so it does happen across many markets. And the other thing is, if you honestly think that the silver market is perpetually manipulated, that is forever going to be held down by whoever, if it's the big banks or the Federal Reserve or anyone, if you really think that, what are you doing in the silver market? Move on. Move on to a market that you believe is less manipulated. The reason I participate in the silver market is, and we will look at this in the charts coming up here very shortly, the reason that I participate in the silver market is because I believe that the market is more powerful than any of these attempts to suppress it over the long run. So that's why I'm here. I think there is a major opportunity setting up. Even though we have initiated a new trade here to the downside today, and I do think the price of silver will be moving lower over the short to intermediate term still. I've been a little bit early on that call, but we'll see. I think it's getting ready to manifest now. So look at yourself. If this is not a market you want to participate in, move over to the Dow Jones Industrial Average. It's been going up every day for the last 3 years straight. You know, nothing wrong with that. I think you'll be punished in the end if you do that because the valuation on the U.S. stock market is at historic extremes. That said, it could keep going up for another couple of years and get even more extreme. So let's bring it back here. Those are my thoughts on manipulation. Here was an example. The setup is here. They got the final buy orders out of the way, and now it looks like the price is set to move lower over the next week, 2, or a couple of months. Let's watch this. Let's bring up the 1-year chart. Okay, important points. This negation here did not happen at a random level. What do we have? A primary downtrend from the April high, very, very clear to see, connecting the April high at 1850 to the June high at 1775, which, mind you, corresponded with the swing low right here in April. This is how we timed the last short that we made 175% on in just 5 weeks. Okay, trading silver to the downside. So this is the kind of thing that you can do if you pay attention to some of these swing levels. We won't get every single one right, but if we just get a couple of these per year, this can really make a huge difference when you are waiting for the miners or the metal to actually move higher. So we have this downtrend, very clear to see. Price is stalling out right here. This corresponds very closely with the 38.2 Fibonacci retracement of the entire decline. These are the light silver lines you can barely see. You can barely see them for a reason, and that's because I don't want you to focus on them except when we're at an important pivot point here. So very close to that 38.2% retracement. Now, the interesting thing that will happen here is, do we call this a false breakdown below this level? What it looks like to me is happening here is that silver is getting ready to carve out a new set of trajectories. It's getting ready to kind of leave behind this massive 2-wave rise and what looks like it's going to be 1 3/4 waves back. It looks like it's getting ready to carve out an entirely new set of technical trajectories here, and this is what markets do. It's rare. I mean, the downtrend line that we're seeing in the gold market that's lasted for 6 years now, that's rare to see something that lasts for that long. So what silver is doing now is it is starting to, okay, there's some new trends that are being respected. My best assessment right now is that silver will grind its way lower back either slightly above the flash crash low or even slightly below it over the next several weeks to several months. That's my best assessment. Could I be wrong? Yes. And would I change my opinion if we see a strong surge above this line? Yes. And then look, I haven't missed out, for example, to those who like to be either all or nothing. I think there's no reason for that. Silver at $16 or $17 is still 70% lower than it was 5 years ago. So even if I'm wrong on a 50-cent or 75-cent move, we're still talking silver that has the potential to triple as it moves higher over the next few years just to get back to 2011 highs. So I see no problem with having a short-term bearish perspective here on silver and even intermediate term perspective. This is my general thesis for what is going to happen with silver. Let's back it out. And we were just looking, mind you, at this highlighted area in the red. So from the all-time low, 1365 in December of 2015, to the present action. This is what we were just looking at. Let's move this out of the way so we can see clearly here. First thing I want to tell you, this is one of the most excellent multi-year basing patterns that I have ever seen that one could ask for in a market. We're talking here from the middle of 2013, and now we're in the later parts of 2017. We're talking about all this price action underneath $25 an ounce. This is going to be a fantastic launching pad when it resolves to the upside at some point in the next couple of years. I do think that's going to happen. I think this would be a very good time, though, to go back and perhaps look at videos from a year ago, a year and a half ago, and look at who were those people who were telling you that silver was going to $50 or $100 an ounce here in the middle of 2016. You know, who were those people saying that here on the first rally in 2017? It was not me. So I am sticking to, over the intermediate term, over this multi-year period, what looks like here is forming is a wonderful basing pattern. I'll tell you, from a base like this, under $25 an ounce, we will be looking at an extremely healthy setup for sometime either later on, 2018, 2019, perhaps 2020, when this breaks out. That said, as we've seen, these swings higher or lower within this base can be enough to get people completely euphoric and then completely wash people out of the market. We've seen that. A ton of people losing interest on these down moves here. So silver is doing what it needs to do. Could silver go back? Now let's look at the intermediate term action here. By the way, the technical levels here, we're talking from the all-time high, $50 an ounce, and I apologize that the key is covering up the y-axis here. This was $50 an ounce, matching the 1980 high. So you start to see the basing pattern come into play here. You have a series of downtrends being broken, right? Almost in a fan. These downtrends are fanning out. So a steep downtrend is broken, a lesser steep downtrend is broken, right? Then the market starts wedging out, terminal bottoming wedge, and we have the breakout above that at 1425 back in the beginning part of 2016. I remember making the videos then saying, guys, this is breaking this terminal bottoming wedge. Go back, look at the videos from February of 2016. They're all there for you to see. Nice rise, coming back, testing the new downtrend line. Now, we see a breakdown below the rising trend line here from the all-time bottom. What does that mean? Does that mean silver is doomed? No, I don't think so. Could silver come back and retest the all-time low? Yeah, absolutely. When you see a trend line break like this of a primary rising trend starting from the low, and it breaks that, it's telling you that this market is not ready to move significantly higher immediately. It's not ready to skyrocket higher. That's what this is telling you. So, if it's not ready to skyrocket higher, what are the other possibilities? The other possibilities are that it could continue to grind below this broken line here. It could grind even in an upward fashion. It could also retest the lows. It could make a new nominal low below 1365, marking the final bottom here at the later part of this year, before this entire basing pattern extends out into the future by even a couple more years. We're looking at probabilities here. This is a basing pattern. This is the most important thing if you're a long-term investor. This is a basing pattern to see here in silver. Extremely clear to see. So when you then want to do more short-term trading or profiting from the mining sector, you have to zoom that basing pattern in and focus on these shorter term swings. And that's what we were doing just a few minutes ago when we were looking at the near term price action. So intermediate term here, until proven otherwise, this trend line has been broken, and the bullish case would be to see silver grind higher, but below this broken trend line, at which point there will be a moment where silver just completely disregards this trend line altogether, and we start moving higher here, perhaps in 2018 or 2019, to re-challenge the $25 level. Let's zoom it out one more time. Fantastic technical action here. By the way, we were just looking at this, and we've zoomed it out. Look at this technical action. Trend lines. Look at the trend line starting from late 2002, early 2003. From the bottom, basically, right around $4.50 an ounce. Rising. The first price spike up to $8, coming back down to $5. Massive spike if you participated at that time. Rising again, second price spike up to 15. Boom, back down to 9. 40% drop in just a couple months. Get ready, this is going to happen even more. Third price spike up to 21. When did it top? Right on the Bear Stearns disaster in 2008. So ironically, the top came right at the worst moment for the financial sector. Keep this in mind. Prices often move contrary to what the fundamentals would dictate. Boom, 60% drop. Another data point, however, for this rising linear trend line. Massive bull market, phenomenal bull market over 2.5 years, up to $50. The price then lost 70%, back down to $13.65. Another hit on this rising trend line. What happened once again? Look at my mouse right here. In the flash crash, just 3 weeks ago, the price of silver touched this rising linear trend line again. So this is just, as a technical analyst, this is just really beautiful price action here. What are we seeing? Let's look at some of the fundamentals. We don't usually look at this. I'm not going to go over everything here, but I am going to highlight just one or two things. We are looking at the 2016 world silver supply and demand. This is every ounce of physical silver that is bought and sold per year, dating back for the last 9 years. And looking at the 2016 column here, what do we see? Total supply coming out of mines and scrap, just over 1 billion ounces per year. Total demand, physical demand, just over 1 billion ounces a year. So roughly equal, which is the highly variable set of data in this equation. It is the coins and the bars. Look at the variations in the demand here from the physical investment category. That's what this is, coins and bars. 2007, 61 million ounces. 2008, 196 million ounces. Over a tripling in 1 year. 2009, falling by 50% from 2008. 2010, a 50% rise again. 2011, a new record high at the time, falling back by 25%. A new record high again on lower prices. And 2015, a new record high, falling back somewhat. So look at the variation here in the physical supply and demand. If you compare that, I'm not going to go through everything here, but this is a fascinating chart to study. If you compare that to some of the other data points, like we look at electrical usage of silver, which, by the way, is greater than investment usage in most years. But the point is here that the electrical demand is not nearly as variable. This is fairly stable year in and year out. This is the marginal demand. And if you're watching this video as a silver investor, most likely, I know there are some people here who pay attention to the industrial fabrication side of things. I know we have some jewelers tuning in here I've corresponded with. We have some industrial users in the space who I've corresponded with. But I would say the majority of people watching this are probably here in the investment category. What we are seeing here, let's get rid of this. What we are seeing here in this rising linear trend line and these massive swings, spikes, but a rising linear trend line, we are seeing the physical demand coming in here slow and steady at rising prices over the long run. And we see traders, we see speculators coming in. Every time this price rises, then the speculators come in, they bid it way up, and then they get scared when it comes back down and they sell. So if you're in the silver market right now, you're most likely not one of these price chasers who was only buying at the recent peak. They are not in this market right now. Who is in the market? It's the physical bid is in the market. So there's either a group of entities or one single entity who is slowly but surely sopping up physical silver. And you can see that very clearly. And look at this precise hit on the long-term trend line. So mind you, as I say that, I think silver is going to be coming down over the next couple weeks, couple months. It looks to me like this trend line is going to hold. And when we see something like a retest of these lows or some sort of a grinding type of price action with a rounding out, as long as some of the other indicators that we follow every week are looking good, I will tell you this is looking to be a phenomenal low here that's setting up over a multi-year time frame. That's the big picture. Over a multi-year time frame. Excellent opportunity. So you, of course, must know yourself. You must know whether or not you are accumulating through these lows and you can hold for the next 5 to 10 years. You must know if you're trying to trade the miners or the GDX, or you're trying to trade options or futures, which is stuff that we get into in the premium service that comes out every week. You have to know whether this is money that you need in the next year or two, because if so, I still think there's a lot of risk here over the remainder of this year into next year. I do offer individual consultations by voice and email if you would like to discuss such an individual situation. I do thank you for watching. We see the manipulation over the short run. Decide if this is a market that you want to be involved with. There's no shame in saying that this market is not for you. The cryptos are hot right now. I suspect they won't be this hot this time next year, and I think there'll be a rotation into some other markets. But by all means, if you are trading cryptos, if you're trading the Dow, fantastic. I am a trader as well, and I always celebrate when anyone makes a profit in any market. But there is a lot of manipulation in this market. It won't last forever. We can see that physical bid coming into the market. It is going to overwhelm any attempts, as markets always do. They always seek out their proper price level. I just think that those who are telling you that the skyrocket is imminent, I would say those are some of the manipulators as well. I think silver is moving a lot higher over the next 3 to 5 years, but give it time. Thank you very much for watching, and I will see you this time next week.